Slow it down. Oh my god. Damn. Damn. Okay. Alright. Bum. Okay. What is good? What is good? We're back. We're back. Had to take a week off. Was out and about doing a bunch of shit. But we're here. We're here. I look like 50 Shades of Brown. Damn. Damn. How is everybody? You guys do anything this week? What's going on? Hold on, I need to put this on story. Link here. Bum, bum, ba, da, da, da. Okay. Add. Okay. Did you guys do anything this week? What's going on? Anything crazy? I had to hop on here. 3 trades, already up 6%. That's amazing. Yeah, brother, we had to take a little break. I had to see some family. It was my brother's birthday. Traveling. But we gotta have a bunch of stuff coming this week. A lot of I got some day in the life stuff coming in. It's actually gonna be day in the life from today. So that's gonna be pretty cool. Actually, let me get a snippet of the video of what we're gonna do for the first one. So we'll do that. Okay, that's one snippet of it. Cool. Did you guys take indices today? This was so clean. This is what I was hunting this morning. Yeah, no, trust me. I already took a video of myself running. It'll be in the reel that I post on Instagram. You'll see it. It's crazy. This was absolutely perfect. My entry long was off of this hourly bullish fair value gap, but then you could have caught it again off of this hourly gap. And I tweeted this earlier in the week. I said I'm not looking at like swing trades, which is literally like the reason behind it, because it's the end of the month and end of the quarter. So I want like intraday moves where I could be in and out of the market. But this was perfect. Like you could have done an N5 market maker buy model off of this hourly gap. You could have done an M5 market maker buy model off of this hourly gap. Like all of this was mad clean. Like mad clean. My entry was off of this here. Off of the order block here, the down close. That swept liquidity, created the hourly ITL, and then we targeted a 1-to-1 or 1-to-2. Oh, dude, we're gonna be 100% running that this entire week. I'm gonna be hammering indices. Primarily just NQ. I missed this because I was at the gym. Like, I would have longed this. Someone in the Discord caught this. Revo caught this? There was SMT at this low. You could have longed the order block here and then caught a 1 to 2. Bro, I've been with family. It was my brother's birthday, so I was treating him. And then I've been back and forth from like the shore and stuff. So like I've just been like kind of traveling, family time. But that's what I've been basically been up to. I've been mad busy with other stuff. But you guys are going to see streams now next week. Well, actually this week, and like a lot of like in IRL content with Day Trading Ralph. He's flying from the UK to New York, so I'll be doing a bunch of stuff with him. I'm picking him up from the airport tonight, so he'll be out here with me. So that'll be mad fun. Oh yeah, this is the structure on the hourly, and it was off of the daily too. Like this is and also for you guys wondering like why I took the weaker pair on NASDAQ and didn't trade ES, because when it comes to indices, I'm only trading the NASDAQ. I'm only trading NASDAQ. I will refuse to take ES. I think ES is so sloppy in way that it delivers price. Like this was so much cleaner to me. Like we had SMT inside of a higher time frame liquidity pool, go down to the hourly chart, and then we had a run on the low here. Our structure was labeled here, sweep of liquidity, and then we have a long-term low inside of that daily internal range liquidity pool. Then price break structure, change save delivery. We retrace, have a short-term low here that gets ran through, creating an intermediate term low inside of a hourly bullish for value gap. And then we have a market maker bond model that you could frame here off of this hourly gap. Price then expands. It hits our 1 to 2 take profit on the M5. And then you have SMT again with ES, because NASDAQ just started to be stronger on a scale based off of our reaction after we created the SMT. Inside of that hourly gap, you could do another M5 market maker model to those highs. The 4-hour order block? Oh, this. It'll get there eventually. And then you could use this order block as a mitigation block if we close above it. Whenever it comes to indices, I'm only trading NASDAQ. I really don't want to trade. Like I think ES, the way that it delivers price is so disgusting. I was using the hourly key level as my so when I usually take my trades, you guys see this when I'm entering on the 4-hour or the hourly. If it's the 4-hour, I'm entering because of a weekly key level. If it's the hourly, I'm entering because of a daily key level. So now I could fractalize that, and I can do an hourly key level as my higher time frame, and then I just trade on the M5 for an execution. So it's hourly to 1 to 5 minute market maker model, or if it's a 4-hour key level, I do an M15 market maker model. I already hit the gym, big. What else do we got here? Oh, you have to hit the gym. Oh, okay. God bless. Next video comes out Wednesday, and then I plan on bumping uploads to like twice a week. I haven't been here, like at my house. I haven't been at my house. Like this is the first day like I actually slept at my house in like over a week. But how do you guys think about dollar index? I'll kind of give you a rundown as to what I see right now. Like obviously right now, we're kind of in like this massive range after sweeping this low. Like it looks like a market maker buy model. We're still inside of this daily bullish for value gap, so I would still anticipate price to go to 105, 514. But oh yeah, the frequency. Well, at least, brother, the frequency of the forever model, it's not very low. It's very low because it's very low that you see it now, and you're seeing it low now on hourly and 4-hour entries because you're neglecting as to what time of the year it is. It's the last month of quarter 2, and it is the last week of the month for June. All of June, in my opinion, for swing trading was low probability, and that is because of it being the end of quarter 2. There was a stupid amount of trades in April and May for the forever model, but now it's literally like, it's, remember I always say this, like it's time before price. Always time before price. And that is a standpoint of knowing when you're executing in these markets. Like in Q1 and Q4, in my opinion, it's low probability. And in Q2 and Q3, I think it's high probability. But you want to be executing in the chunk of Q2 and Q3. So if it's the last week or if it's the last month out of the quarter, I'm not anticipating massive price swings because I'm assuming that the month before that has already reached like a quarterly objective point. You kind of get what I'm saying? But you can fractalize the model by doing these lower time frame trade entries like this, like using an hourly as a higher time frame key level and then executing on the M5. It's the same thing. It's literally the same thing. Like this is literally the model. And this is what we took. Order block, down close candle, sweeps liquidity, price comes back into it, taps that order block, boom, move higher. This is also creating SMT here. We literally create SMT at the entry point. Literally no drawdown at all. None. Literally we're in and we're out. Wait, what window? Hold on. Yeah, I use weekly context. I use daily context here too. Because this was a daily 1 hour M5. Daily key level, 1 hour M5. That's what I do. Oh, wait, what am I blocking? Oh, wait. Do you want me to move my camera? Let me know if it's blocking something. I'll move my stuff around. You want me to move the camera? Oh, okay, hold on. I'll move this like here, and I'll just take off the overlay. Is that better? It's just it's NASDAQ. I didn't mean to block that for you. But I shifted. No, I shifted to the lower time frame entries because of the time of the year. I got you. So, like, I want to be in my trades and I want to be in and out of the market. I don't want to be, like, holding swing trading. I don't want to hold swing trade positions because we're getting into the open of Q3 and we're getting into the open of July and we have NFP the following week. So that would mean, like, okay, are we going to have a quarterly power of 3? Are we going to have a monthly power of 3? NFP setting the low of the month or potentially the low of the quarter. Like, that's what it really is that I'm factoring in. I don't want to be a part of like potentially getting like liquidated from a massive manipulation from news and monthly open. You know what I mean? Hold on. So, okay, on average, if hard to answer, how many setups on the low? So, on the lower time frame, it definitely occurs more frequently. Like, you could look for intraday moves like I did on NASDAQ when you still can provide yourself with higher time frame context. You could still look for, like, intraday price delivery in anticipation for the external range drawn liquidity. Like, en route to the external range, like, if I'm entering off of the hourly chart here and say like I executed on like this breaker block, or if I just executed on the hourly gap here, I would still be in the trade at like a 1 to 2. But if I can execute on the M5 inside of this, knowing that the hourly and the daily want to push higher, I can catch more trades. At the end of a quarter, especially the last month, yes, absolutely, I scale down. I 100% scale down. I take it easy, and I don't look for trades that I'm holding for multiple days. Why am I not using quarterly theory anymore? I just don't need it. Yeah, I'm doxing Ralph. Whether he likes it or not, I am doxing him. Like I'm dead ass. Yes, Arian. That's literally what I did. Oh wait, no, I didn't do. I still had daily context. You still want to have. You want to make sure that if you're executing on the M5, you're still in proper alignment with what is the daily draw. Like you want to make sure that your trade that you're taking on the M5 can still be in alignment with what the higher time frame draw and liquidity is. Because like let's say like the daily was just stuck in a consolidation and I had no idea what it was doing, or the weekly was stuck in a consolidation and I still didn't know, I would not have taken this. But since I had a reference point from a daily chart, I was still able to capitalize this on the lower time frame. And there goes that piece of the pie on NASDAQ. Beautiful. So you could have done this again on the M5 market maker buy model off that hourly gap, like I said earlier, taking out that high 19,968. The daily inversion gap? What, this? Like trading into it? Something that you guys can keep in mind and look out for. Watch and see if we can get a daily close above 20,015 and a quarter. Because then that would be a daily bullish order block for higher prices. But if we fail to get above that and we fail to close above it, then mark off the inversion gap. But personally, I think that it's going to be a Tuesday low of week, and we're going to drive higher and most likely get up into here. I think we're going to get up into here, and then if we drive through that, then we're taking out the daily internal to external range and moving up here. That's my opinion. And if you look at the weekly, it's just a weekly gap, weekly internal to external range. Like, it's pretty simple. There's no reason for me to be bearish on indices when price has literally just been making low, higher high, higher low, higher high, higher low. Like, it's literally just simple market expansion and delivery. Taking out old highs and lows, rebalancing imbalances. So there's no reason for me to be bearish unless proven otherwise. Your last short on psychology was a real deal. Absolutely. Absolutely. 64% S. There's some tweaks that I'm doing on my back testing to make sure that I'm trying to bump that up to a 70. Once I get it up to a 70, that's when it's actually that's when things get serious. Oh, you want me to review the trade again? So it was literally just daily. It's literally like how I frame every other trade that I've taken. This is the only thing I didn't execute on the hourly here. I just had the daily as a reference because I knew that price was going to move higher. So I used the daily internal range liquidity pool to external range draw. Price sweeps the lows from Asia. Well, actually, this is at 16. Well, still, we sweep Asia lows, but we create SMT here with ES. Price expands, break of structure, form an hourly bullish fair value gap, execute inside of this hourly gap, M5 market maker buy model, then price expands higher. You could have done it again as price creates SMT, creating a short-term low to the right of the intermediate term low, confirming this as a, what is it called? A protected low. So you could have done an M5 market maker buy model off of this, and then draw to the highs here at 19,968. But literally this is as simple as daily and weekly doing internal to external range draws. It's hourly doing an internal, external range draw, internal, external range draw. Like, it's the same thing. Yeah, I got you guys. I'm just trying to make it as simple as possible. Yeah, it's literally classic bye week, London, Tuesday low of week, looking for a weekly candle formation, open, low, high, close. But Muddy, when I take anything on indices, I'm only trading NASDAQ. I think NASDAQ's delivery is much cleaner than ES or YM. I hardly ever look at YM. I think YM is on its own time, bro. Yeah, I use FX Replay and I also use TradeZella. One thing that's been helping me with higher time frame SMT is waiting for either a structure to, yeah, you want market structure to align itself with the draw on liquidity before news, and that drastically increases your win rate, like 100%. Like this, we had news at what, 10 a.m. and 10 a.m. news was what we expanded higher. And if you even look at it at the M5, this is our 10 a.m. news right here. And I always wait for after equities open if I'm trading indices. 9:30, like right here, provided a Judas swing lower, sweeping the short-term lows. And then after we created the Judas swing, we had to change the state of delivery. Price tagged the order block that swept to the low. And then at that tag of the order block, we created a higher low on NASDAQ. So that was our SMT. And then price expanded higher with 10 a.m. news just being our driver to the take profit level. When executing on M5 market maker model inside of an hourly POI, do you just use an order block like the forever? Yeah, just like this. This is literally what I did. Right here. Boom. I do exactly what I do on the forever model on the higher time frame, on the lower time frame. Same thing. I fractalize the model. I fractalized the model. You can anticipate an well, it's rough for me to say to anticipate the ITL if I had to give you any advice, I would wait for the short-term low to form to the right of it, to then confirm it. I don't want to tell you to anticipate intermediate term lows, but I would watch regardless of when you have a confirmed long-term low and price then has a run on liquidity or like a run on stops like it did here. Just watch the reaction as price runs the stops. And that's exactly how I framed the trade. Can you look at EuroCAD today? Oh yeah, actually one of my Discord members caught EuroCAD and I marked it off here. So the daily, I know you guys were watching this. This was SMT here with GBP CAD, but the daily on EuroCAD is just a market maker sell model here. So this looked like redistribution. So this was like a daily silver bullet, and then if you go to the hourly chart, the hourly had SMT here inside of this hourly bearish fair value gap, like this. We failed to take out the highs, we made the lower high, and then if you go to the M5 and you wanted to trade this even deeper, before news, if you were watching it, this is the same thing as we always look at. We have a run of a high. This is the last up close candle before price breaks structure lower, changes date of delivery, price trades back into that order block on the M5. You could have executed there to take out the low pre-CPI for CAD. But I didn't do that. Discord members caught that, not me. Oh, you saw that, Brianna? Yeah. Yeah, no, I said to you guys, I was like, I'm going to take a stab at longs here, looking at the M5 entry. It was the same thing as alignment with what I look for on the long-term frame, or the long-term perspective for hourly and 4-hour entries. Yes, sir. I didn't take this, neither was I watching it. But if I wanted to look at it on the hourly chart, I would not have entered here, personally. But I saw the SMT, I saw price tip the hand of Euro being weaker than GBP, and then CAD CPI just delivered us lower. The entry would have had to be on the M5, because this is what it was clean. I don't trade it, brother. I'll use the one model. The only thing that I was looking at this week was, I was looking at, actually it's crazy, I'm looking at USD CHF. This is going into the next month, like moving into Q3. So what I was paying attention to was price inside of this monthly gap. And then I went to the weekly chart. The weekly was inside of this weekly bullish fair value gap. And then we had a stop hunt run here. So potentially we have a weekly swing low to set in. And then moving into the next week, we could see the fourth candle expand higher. And then we can go from weekly external to then internal range liquidity being this weekly candle's high at 89,931. So that is what I was looking at here for price to move to. I was looking at the daily. We have SMT divergence with dollar index here inside of this redelivery rebalance, and then we have a down close candle here, and I wanted this daily candle to close above 89,434 or 436 to confirm an order block. So then we can use it as a reference point to long to 89,936. That's what I would like for there. But for you guys on dollar index, this is what I was kind of like worried about. So, like, if I'm looking at both dollar and I'm looking at bonds and I'm looking at yields, like, if we are bullish on dollar, we want bonds to be bearish. And we want yields to be bullish as well. So, like, if I'm looking at this, I had this market maker model framed out after we ran these highs here. We had a slight purge, ran this high here inside of 2 to 2.5 standard deviations in this zone. So I would assume that if bonds can drop to these relative equals at 11,907, that would be enough for us to then have dollar at least come up to 105,512. I would like that to happen, because then that would just be like an accumulation, manipulation lower, potentially getting into this gap here, and like doing this. Like if we did sweep and then move higher, because 2 to 2.5 standard deviations is a retracement or reversal. So if we can do that, that would give us enough speed at a minimum to take out this high, and then maybe if we even dug a little lower, there's a flat body low on this daily candle here. So if we did this, that would be enough speed for us to take out this high at 106,172. And in a perfect market, these being inversely correlated, that would be enough for us to then move up to at least here, and then we start a reversal down lower if we fail to take out these highs. I know a lot of people are expecting this to get taken out, but it's all going to be dependent on what the fundamentals say to us. What else are you guys looking at? I don't really know what's going. I don't really know what's going on with majors, to be honest with you. I'm looking at, or I was looking at, price inside of this inversion gap, and I was looking at if Euro or GBP ran one of these lows and the other one failed, but they both ran the lows, and we did not get the SMT that I wanted. So I don't really know what this is doing. It's kind of just ranging and consolidating, so I don't really care for it, if I'm being honest with you. I don't really like majors right now at all. I think FX is kind of chopped, in my opinion. I really don't like it. Looks pretty nasty. The forbidden fruit, yeah. AUD, NZD, bro, I don't know. Someone said this too. Did I not take this like an idiot? Oh my god, I did not. Did I not have an alert set here? What the fuck am I doing? And why is this not loading now? Is this just not gonna load? What is going on? Alright, well, I don't know why GBP AUD is not loading for me. Oh well. Let's see. Is it loading now? Nope. Let's see. Someone said AUD NZD. monthly bullish fair value gap. What else do we have? I hope you guys aren't trading this. Like, please don't trade these pairs. Just use these as strength indicators to understand if you should long or short AU or NU. Don't trade it. But monthly bullish fair value gap, weekly gap 2, and a break or 2. This series of up close candles like this. They would need to get through this gap here. The daily. There's no flat bodies. It's good. Maybe AUD NZD on the daily wants to run this low here. And then like that, because there's no run on buy stops here, so I would assume that this runs buy stops, creates an intermediate term low on the daily, and then moves higher. I think it's like that. So if we're doing a monthly internal range liquidity pool to a daily market maker buy model, that's what I would say. Pretty simple. Pretty simple. Exactly. Don't overcomplicate things. Very easy to explain. But I don't like any... Why did GBP AUD completely get erased for me? Maybe that's a sign that you just shouldn't be trading it. So I can't look at EA or GA. Kind of happy about that now. Like, honestly, it might be one of my least favorite pairs. I already recapped it, but I'll do it again. Just daily key level reference. Hourly market maker buy model off of the daily key level, and then I use an hourly key level framed in M5 market maker buy model off of this hourly gap, and then you could have done the same thing here. M5 market maker buy model off of this gap to this high. Pretty simple process. Long term low, intermediate term low, short term low. Fractalized forever model. Entry off of this order block tag right here. This down close candle. Price taps it, SMT, boom, move higher on news release. Euro is weak probably because Euro pound. I'm going to send an alert here. Yeah, Euro pound is getting killed. Tap the weekly internal range liquidity pool. If price wants to continue lower, then it's going to go here to that weekly low. Nice, brother. Easy peasy. Easy peasy. Simple process. I already want to... EuroCAD was the daily internal to external range liquidity pool. Internal range, there was SMT here with GBP CAD. Hourly chart, SMT here. M5. Up close candle, super liquidity moving into New York. Entry would have been here or here too before CPI had news, and then the delivery was just smooth. What is the question? If there is a weekly internal and daily internal, take a guess. Whatever one is the subordinate time frame is the one that you focus on. Weekly is higher than the daily, so you focus on the weekly. That is the golden rule. I don't know what's going on with EU and GU. I have no preference. Literally no preference when price is on a daily consolidation. Like, why would you want to trade this? I have no idea what this wants to do. Like, literally no clue. The only thing that I was anticipating was price on EU to move up higher, take out one of these correlated highs, and then create SMT with GU. While GU stayed inside of this daily internal range liquidity pool here. That's what I wanted. How was my week? It was good. I'm about to do a day in a life Instagram reel for you guys. I'm going to post it tonight after, or maybe I'll post it. Yeah, I'll probably post it tonight after I pick up Ralph from the airport. But yeah, I just wanted a break. Holy fuck. I had, it was my brother's birthday, so I was with family, and then I was traveling, and then I was down the shore. I was kind of bouncing around everywhere. This is the first time I'm back to my crib since, like, this is the first time I'm back for a while, actually. Like, I haven't been at this house in, like, fucking, I haven't been in this house in, like, a week. And then I come back, and my next door neighbors are building a new house. Yeah, no, it was nice being with family. It's always good to make time. Like, trading is one thing, but, like, don't let it consume your entire life. Make sure that you're making time for family and friends and stuff like that. It can be a lot when you're just going balls to the wall and this shit. I'm going to be doing everything with Ralph live. You'll see him in my camera and back, all that shit. Yeah, no, guys, I rewatched the stream in the very beginning. I explained everything. Like, literally everything. Oh, yeah, I'm doxing his ass. I'm literally doxing Ralph. You guys don't need to worry about that. I'm doing it on the reel that I post. What is it? You could have shorted Euro Pound up here, but I don't trade this. You don't trade these pairs. Euro Pound and AUD NZD, you don't trade them. I'm going to do weekly, I'm going to do kick streams, and I'm going to do YouTube lives. I hate EA and I hate GA. Probably my least favorite pairs to trade besides CHF. Both of them are horrible and disgusting. I get tagged in EA and GA so many times. Like, why do you guys want to trade those pairs? They're so ugly. It's like people tagging me in gold and silver. Legitimately atrocious. EA, GA. I had an alert marked off, but like a lot of people were looking at this too. Price on GA, just to give a quick overview. We already ran this. We did internal to external range draw already. So why would I use this fair value gap again to then try and catch the external range draw when we already took it? Like, why? Why would I do that? If a fair value gap has already been used to take out an external range draw on liquidity, there's no point for me to look for it again. It's waste of time. What's the UV out right now? I need to like lay in the sun for like a minute. Well, the UV's only a 4. I got no sun today. Jesus. If you wanted to, you could have literally done this. You could have shorted this from a weekly perspective. Weekly highs. But again, we have SMT the lows, SMT the highs. I don't want to do that. I enter off of the CSD in the order block that creates the low and also SMT. It's best to have it on both time frames, but the higher time frame will be key to you. Like NASDAQ, I had it on the daily and I had it on the hourly. And then I had it on the M5 as well. What did you see here? Anything? A 1 to 2. I always go for 1 to 2s. The only thing that I was looking at on GA was fucking... Wait, what do you have? SMT on the daily? I don't see it. Inside of this daily gap, I don't see it. Unless you were looking at... There's not even a daily gap here. Yeah, there's no SMT. Only thing that you could have squeezed out of this was this. If you use this weekly gap, which I wouldn't have used, there's SMT at the lows here. Price creates the order block here that creates the down close that also creates higher time frame SMT. You could have entered here, executed on the order block here. You could have done the stop loss at the body, since it has a long wick, and then you could have targeted at 1 to 2, and that could have been your trade, and you would have been out today at 5 a.m. Or if you did the wick, you would still be in the trade, and then you would be looking to target here. But since this is a long wick, this would be a big stop loss. I would want it to do here. That's what you could have done. 1 to 2 here, and you would have been out. At this time of the year, I am closing full at 1 to 2, and I'm not leaving any runners. Damn. Yeah, that's interesting. Yeah, watch. Yeah, exactly. Watch CT Trades, market structure. Yeah, it's a good video to watch. Definitely recommend that video. Yeah, I don't want SMT at the highs and the lows. That's gonna make me that's gonna give me a low probability bias. But in regards to besides the charts, I just wanted to hop on here, give you guys an update, what's been going on with me. I wanted to give you guys an idea of what we're doing for scheduling. It's going to be me, Ralph, and then Nick Does Futures comes Wednesday. We'll be doing a lot of content together. What's going to be kick streams, it's going to be a lot of YouTube streams. Like I'll be doing one today, I'll be doing one tomorrow, Thursday, and Friday. Like we'll be doing 4 streams this week. We'll be doing kick as well. A lot of like Instagram content, IRL content. You'll see a lot of stuff like day in the life. Like I want to start posting that too, because like what I do, like this is literally nothing. This is just the tip of the iceberg as to what I do. And I know you guys were interested in that. I made the poll on Instagram, but a lot of stuff is definitely in the mix. And then if anybody lives in Florida or Miami, we will be there July 8th to the 15th or the 14th. So if anyone is in that area, let us know and we could do something together. But yeah, just a little update with you guys, and also describing the trade that I took this morning. Nothing too crazy that we're looking at, but in regards to FX, be very skeptical on the delivery. We have bonds moving up, and we have dollar also trying to move up. That's not a symmetrical market. We want them to be inversely correlated. So right now, daily inside bar, what we can anticipate for tomorrow, like I know we don't have news tomorrow, but it's either going to be another inside day or we're going to have price drop lower, taking out Monday's low for the dollar index. And then we expand higher. But regardless, I still think that 105.513 is going to get taken. All right, last question. If the CSD candle was taken out by the next candle, would you still take an entry? Like here, this is an example of where I still would take an entry. It's if the candle that took out the CSD candle created SMT here. Like here. Like on NASDAQ inside of this hourly, okay, you don't need to ask the question twice. The candle that took out the low from the change in state of delivery candle would still be classified because it created SMT at the low with ES. So you could have still entered right here and targeted a 1 to 2. That's the only way that I would still validate this. Other than that, I would not. But all right, one more. So when entering on the short-term perspective, look for a model daily, weekly. Then look for an entry on the intermediate-term perspective and stop on the short-term perspective for the OB. Yeah, you'll get a quicker profit move just like how you had here. Like you'll be in and out of the trade probably within 30 to 45 minutes. But that's it for the stream. Just wanted to hop on here for an hour. Hope you guys are well. Expect a lot more streams this week. If you have any more questions at all, stay tuned. Keep notifications on. YouTube video coming on Wednesday, and then just a bunch of Instagram reels coming up too as well. So just look out for all of that. If you have any questions at all, feel free to @ me on Twitter or DM it to me on Instagram. But be safe, everybody. Good stream as always. Much love, and I'll catch you guys all later.